Segregation of duties is a term that refers to controls you have in place to prevent fraud and theft in your business. And this is particularly important right now as we see hundreds of companies rushing to create AI startups. So what are they doing? They're raising money, they're hiring people, they're buying hardware and software, they're paying for marketing costs. It goes faster and faster and faster. When you're in this sort of situation and you're rushing, you tend to make mistakes, and you can very easily make a mistake when it comes to internal controls. The thing that's most at risk is your cash account. It's the easiest asset to steal, and it's also the asset where you have most of the transactions. The account with the most transactions is usually cash or a cash-related account. So let's talk about the three components of segregation of duties. The first one is custody. Who has access to the checkbook, or in an automated world, who can log into the bank portal? Authorization. Who has the authority to sign a check or to send money through the bank? That is usually somebody different from somebody who just has custody. Third, who does the bank reconciliation? And ideally, you should keep these three tasks between three different people. Now, if you're a very small firm, that's not possible. But when your firm gets to any size at all, you need to split up those duties between three people, because it prevents fraud and theft. Another thing that's critically important, and this falls by the wayside when companies grow too quickly, is you need to reconcile the bank account as soon as you possibly can, as soon as that bank statement is available. And in today's automated world, it's the day after the end of the month. You need to make it a priority to do it immediately. A lot of this is now automated. It doesn't take nearly as long to do a bank reconciliation. And the reason why is that it is a way for the person who usually does the reconciliation to catch fraudulent transactions, like something called a fictitious payee. So let's say you do business with a company called Midwest Concrete Supply, somebody you do business with all the time. And you get an invoice from a company called Midwest Concrete Suppliers. And maybe you see an actual payment go out based on the invoice. Well, suppliers is a different name from supply. What they're trying to do is create a fictitious payee, a name that's really close to somebody you do business with, but has a different name and address and a different account, maybe a credit or debit card that you pay them through. The only way to really catch these is the veteran person who's doing bank reconciliations will hopefully notice that, find out about it, and flag it. And even though you've paid it once, it'll prevent it from happening again.